Hello guys, welcome to the Trading Parrot. As you know, I've been trading this week. In today's video, I'm gonna share critical information, critical action I've taken yesterday. My Patreon community is already well informed of my actions. And in today's video, I wanna discuss what I think are gonna be my next steps. Guys, if you like this type of content, make sure that you're subscribed to the channel, hit the notification bell to get notified every time I put out one of these videos. And the altcoin season TA video went live as promised. This is part of the live stream private that we did yesterday based on the coins that people voted from my elite community within Patreon. The video now is shortened, edit, and is available to anyone that wants to watch it. Make sure you don't miss it this weekend. It's packed with a list of around 10 coins that we did live TA. And if you want to trade any altcoins within the second day of the altcoin season, consider opening a decent account on an exchange. And that could be 2bit. 2bit is an exchange built by the people from Bybit. It offers 30,000 up to 30,000 in rewards depending on how much you deposit and with how much volume you trade. They give you $50 for free, so you get started even before you deposit your own money, and you get to choose if you want to do KYC or not. Links are in the description. Let's have a look at a few tweets to see what's going on out there. Roman is saying, all right, back to the charts after seeing a close above 113K, which is good for our 1 week bullish divergences, but I don't like how volume is. Typically, you want high volume on a breakout. He's talking about the breakout of the previous support and recently resistance. Remember that we were seeing in here an inverse head and shoulders. The target has already been met by getting around 115K, and after that, thanks to the decreasing volume in this direction, he wants to see a move at least to retest 112.5, 113K, and then further upside, or a fail to continue to the upside within the context of what we were calling a few days ago the red bear flag. We're going to discuss if I still think that that is on the table. This morning, 4 billion worth of Bitcoin and Ethereum options were expiring. Something interesting that James is sharing here is that since July 2024, Bitcoin has usually bottomed within the first 10 days of each month, the fall cycle. Every vertical line is the beginning of a new month, and as you can see, you can just count up to 10 candles in the future on the daily chart, and you're gonna see these bubbles, which is typically where you bottom and then you resume some upside, or even within areas of sideways as well. You can find 10 days ahead of the first of the month, some sort of bottom information. Very interesting. And remember, it's not that you have to wait 10 days, but within 10 days. Like for example, in here is immediately in the beginning of the month. And Martin is sharing something that says caution ahead as a question mark. 8 out of 10 signals in the CryptoQuant Bull Score Index are flashing bearish for Bitcoin. Momentum is clearly cooling. The ones that are still in the green are Bitcoin demand growth and the technical signal. The rest of them are all in the red. What is ChatGPT thinking that is the most important thing for today? According to this news, we can see that US spot BTC ETFs log strong net inflows with 553 million, led by IBIT. And then we have the options expiring, which is a moderate bullish news, 6 out of 10. That's already in the past because it expired 8 a.m. in the morning UTC time. Then we got BTC reclaims 115 after US CPI. Let's remember that PPI reading was bullish and CPI just as the expectations. I'm gonna read the questions from my community. I usually leave a question right when I start recording the video, and then I go through the questions in here to make sure I don't miss important things that my community want to know. If you want to be part of that, the link to join my Patreon is in the description. We got possible short position conditions. And yes, Gabor, you don't have to ask me. I'm actually on it because I have taken critical actions on my long. I'm gonna disclose what I did and I'm gonna explain it with further detail later in the video, as well as explaining what I'm looking for my next position. USD dominance and its current patterns, please. Lara is asking for that. Eric is asking for possible rebound levels before an eventual sell the news on the 17th in case of a bullish weekend ahead. Details on selling pressure for long-term holders with new H coins moving. Then we got Siri talking about M2 and the FOMC, all of the things that are making traders bullish. Could the markets factor in both the above data and pump till the FOMC meeting? Your thoughts on that, please. Let's try to cover all of that. Yes, the M2 has been coming up, but you know what my thoughts are about the M2, particularly in a topping year. Of course, Bitcoin could exit the 4-year cycle, and I'm open to that possibility, but every cycle we talk about the same, that we're going to exit the 4-year cycle, and there's always an argument, strong one, to say, well, this time we're going to break the 4-year cycle, we're going to enter a super cycle or no more cycles, and we do references to the past, to the S&P and the Nasdaq when it was doing a cycle and then the cycle got broken, typically ripping off all the shorts, because most of the people think, okay, this is the topping year, let's short with everything, and at some point the cycle breaks and it rips off all the people that are in a short expecting the beginning of a bear market. Not necessarily the case this particular 2025 or 2026. The most likely scenario is that we continue that trend of having cycles, but we need every cycle to leave the window slightly larger open for the possibility of ending these 4-year cycles on Bitcoin. Right, so M2 is pushing higher, right? We were at all-time highs very recently, but if you look at the end of 2021 and the beginning of 2022, when we closed that cycle, the top of the price was in 2021, and everybody will have been shouting that the M2 continues up into this area where we meet with 48K. That is the dead cat bounce before the bear market, and at that point the M2 is at all-time high. And with all these theories that the M2, you have to delay it, shift it to the right, and you're gonna get, I don't know, 1 or 2 more months of upside based on M2 pumping, you could have said the same at 48, that we're gonna have a few more months pumping and get our new all-time high and all the theories of going into 150K. But guess what? From that point, you get the most aggressive dump in the bear market. And that means that, well, pretty much 1 out of 2, this thing fails in the M2. Is not always the case that M2 drives Bitcoin to the upside. Beginning of bear markets? Nope. Topping years? Nope. And let's go a little bit into the trading space. Look at this. We close by the letter. Can it be more perfect? I mean, people that say that CME gaps don't matter, I don't know where they have their head when they're trading. But look at this. It's just by the dollar. And if we look at the calculation on Binance prices, we can also see how perfect it is. We left the orange line there. It's very, very, very accurate, guys. We pinch precisely 116,377. That number we talk about the whole week. From Monday, we talk about the CME gap and the possibility of closing it. Now, at 114.1, I believe, I decided to close my long. I want full focus now on trying to find the possibility to enter in a short. We have already taken out the CME gap, and part of that motivation to enter in that trade was the possibility of filling the gap partially or fully. And we did that, so now we no longer have that possibility. We are in September. Seasonality should be a little bit more on the bearish side, although so far that's not the case. And we have completed, I could say, 50% of a potential V recovery going into the beginning of October. Beginning of October is roughly around here. So if we were to continue with the same speed, we're going to meet up on a V recovery fully completed at the 1st of October. And personally, I don't think that that is very likely. Of course, I'm expecting to see some swings. Like Roman say, I actually really like that idea of coming back for a retest at 113.6, 112.5, That band is the previous resistance, and coming back for a retest to prove that this breakout with low volume can survive the fact that we already closed the CME gap, we already took the large fair value gap that I was sharing with you guys, and some of those levels of decent liquidity that we have at 114. So going from here straight in a line up into beginning of October is a bit stretching it too much. Of course, there is liquidity pools there that I was showing that kind of end at 120 or become way less. We'll look into those. So, of course, I updated the Bitcoin status just by removing the CME gap, and we are on our way in this trajectory to the top of the range on the RSI. So far, we have completed we could say 1/3 of this last final leg that I've been talking with this red line in there. Changes I did is I add this trend line in white, and I have the support at 53 that is located at 113.7. So our support, the most bullish one for this breakout to continue into 84, is to come back and meet with the 53. That 53 for me could be an area that I could potentially consider entering again in a long. I close at 114.1, so that is kind of the only reason why I wouldn't re-enter. I don't like re-entering too close to where I just took profits. Kind of a rule more than necessarily that this is not a great place to enter. The rolling up continues, and that come back into here into 112.9 will mean that we are retesting the VWAP anchor to the all-time high, the roll up that the angle comes in this direction, and around there as well this support of this trend line. Of course, the white line is the most bullish support. We don't have to necessarily defend it fully. We can pinch it and reclaim it and do a little bit more noise. That's something that I allow in the 4-hour time frame, because after all, it's all over the place most of the time. On the daily, we are about to meet with decent resistance. So that's something that we need to take in consideration. This 61 should be decent resistance, and that is currently located at 117.145. That could be a sweet spot to start building into some sort of short. Now, if you enter into a short, ideally you have some experience, because the sizing of your position or your risk management or your DCAing needs to be well polished, well practiced throughout months, because if we end up doing the full V recovery at the beginning of October, we're going to have to average up at a very slow pace with a lot of patience to be able to survive pain potentially in October, November, an extended period. I still think that 117, slightly higher if we go into 120, could be a great area to dip my top into a short. I come back into testing 113.3, 0.4, 0.7, around that area. I would like to consider potentially re-enter in a long. And there has been times where I'm holding a long and a short at the same time. If that blows your brain, well, it did with me the first time I heard that years ago. But yes, you can do that as well. Let me know in the comments if you ever done it and how you do it. I'm not talking about hedging. I'm talking about, well, you meet one level, you're slightly wrong, and then you put the other position, you take profits from one and then from the other, one at each time, and adding volume as well at different times. It sounds a little bit complicated, but it's not once you conquer first doing one at the time, please. Right, this 61 is a strong resistance, but that doesn't mean it's impossible to break. We have the top of the range at 84, and keeping an eye on where is that top of the range, in this case is 146.6, gives you a rough idea of what you need to protect against, right? So if this gets broken, the risk is that you could go in one hit to the top of the range of the RSI. Now, the RSI doesn't mean that the price cannot go beyond 146, because at the cost of bearish divergences, you could go even higher. Low likely, but possible. Global support still at the point of control at 96.5. CPR, look at how beautiful is this. This model just deserves continuous love, in my opinion. If you focus in here, we have completed the third pivot and we have been rejected from there. This is one of my candidate areas to potentially do that bear flag. If not in here, maybe the 120, and that's why I'm thinking one of those two to dip my toe in a short. Now, I might not take the short. If I see strength, if I look at the order flow, order book and stuff, and I see tons of new accumulation on spot, particularly, or long-term holders taking a U-turn, because currently they've been distributing more than ever this cycle. If they do the opposite at the highs, which is low likely again, well, U-turn for the trading parrot, of course. I did this already this week. I was going to take a short and I took a long. Top of the range for the weekly, let's remember that once again, the top of the range is currently located at 122.5. That's on the weekly, assuming that the white line that has been holding this area continues to hold. And let's remember that at the end of a cycle, that line that comes down tends to be the one that sends us into the bear market. So if that repeats the same performance, well, this one should do the same. Again, considering that we can break certain models, certain patterns. Patterns are not just to fall in love and never ever break out. You have to break out with them at some point. And there is a pattern that I noticed today that I want to share it with you. I never heard anybody talking about this, but if we focus on this particular bull cycle, we can see that every time that we enter exploration into a new range, for example, from the bottom of the bear market, and we do all these green candles, after we reach that top, in this case 31K, I could say that the next 2 months post finding that top, don't break that level. And that is something that I can confirm that it happens every time. It happens here, it happens here, here, and potentially once again for the 4th time in here as well. Let's have a look. We pinch that top at 31 and then we get this candle that gets held by this top that we did in April. So in May, neither in June, we can break what we have already achieved in April. Let's go back to here. The high is at 73.5. That's where I sold, right? I'm super proud and I'm not gonna stop saying it. This one sees a rejection and 1-2 months after, none can break that. Then this one doesn't top there. It actually tops at 108 and all these months are below that level. So here, if we say that 125 was the top of this particular range, then it should be, in theory, if we repeat that performance, that neither this September or potentially October can break 125. It should take longer. Or if you count this 123 as the top, then neither August or September. I prefer the second option because I'm tempted to say that October should break it. Leverage squeeze continues to be on the top end, so we still have overcrowded level of longs. They're sticking around, they don't want to go anywhere, and the levels of profits taken is starting to push a little bit, a tiny microscopic bit from the bottom in here. If we were very close to the yellow line or the white line, I will be probably shouting like a Magdalena, because that means that there's just too many people taking profits in the green and that we have to be extremely careful, but it's not the case yet. Something else interesting that I should have left for the Sunday Alpha, but since I don't know if I'm going to be able to do a Sunday Alpha this weekend, I want to show it to you here. This is the monthly chart, and what you see in the middle is just the normal classic stochastic RSI, and on the bottom end there is one that I changed the code. Okay, I remember sharing the code of this in my Patreon, so if you search across all my articles, I'm sure you're gonna find it. But look at this one. It's everything the same except for this ongoing live candle of the month of September, and I have it on the bottom end. You can see that the mouth is open against the one that is the classic one that is doing a bear cross. So yeah, currently we are doing a bear cross, and what I want to know is at what price level we dodge the bear cross on the monthly. How important is that? Well, it makes a massive amount of information for you to know how safe we are with this move up that we are currently having. Why? Because historically, once we come back down from 80 in a topping year and we get the first bear cross, we are in the bear market. We are entering straight into a bear market. And that is something that happens here in this area there, something that happens also in 2018. So if we are continuing with these bear crosses that are crossing with diminished highs in here, this time at 60, this could puke back down in here and lead us into a bear market, potentially. So I want to know at what price we can prevent that and go back into the 80s. Is that doable? Yes. Around a price of 130, I haven't tested with 125, but potentially that also does the trick. Yeah, you can see there that also opens the mouth of the stochastic. And let's say 115, no, that is a bear cross as well. 19 is a bear cross. 120 is also a bear cross. It's very difficult for the month after this to prevent a bear cross. It needs to be slightly separated so the month after with additional upside can continue with the mouth open and reach the top of the range, of course. So if this month, right, remains around these highs, or even if it closes at 122, 120, we still get a bear cross with bearish divergence on the stochastic RSI monthly. So wait that in. And one of my Patreon members was asking about distribution from long-term holders. I'm going to do that, and also large holders. And you can see that at 73.5, that peak, there was a huge distribution of long-term holders that ended up accumulating at this area. We did this by the letter. We follow their advice, and it worked out pretty decently. We also did it in here, selling and then buying again. I did it better than them. We didn't start buying at 110, we started buying at 70 something. And now you can see that the distribution, although it is, we can acknowledge that there is distribution from long-term holders, but it's not as much as these two peaks, right? Now, this is the bad news. The biggest distribution from long-term holders in the past cycle was at 48 when we reached this area here at 40, we could say. Then it continued into the first all-time high of 2021, but then we didn't have much distribution. Why is that? Because there's a caveat. This tracks distribution of spot, and the dead cat bounce that went into 69 was led by futures. Most of the large holders were already done with the cycle. So this was just fun for speculators that were buying with futures, riding the dead cat bounce into 69 and then heavily taking profits, creating a dump straight into 35K. So if there has been a decent distribution already, 1-2 peaks, do not count on waiting until this goes into strong distribution, because in 2021 we never got that strong distribution. Okay, so watch out with waiting until they do that strong distribution, because we already had two, and in 2021 we also had two, one here and one on the first initial move up from the bear market. And I say I was also gonna cover what the whales are doing, and as I said, whales are selling heavy. How heavy? Well, not as heavy as the topping area in here in 2021 in March, right? That is the peak of selling from large holders. But we can say that is the biggest distribution that we have had in the whole bull market from large holders. So that is something important. Long-term holders, at least in this particular chart, shows it as flat, and that's because this is tracking 155 days, so it's a little bit lagging this indicator. Still, it's good to see it from the big perspective, but treat it as a 200 moving average, right? Big Whale Explorer confirms the distribution that there were in the previous cycle, distribution 1 and 2. All the rest were smaller, and then we have this distribution at 73. Deposits, these are just deposits, not distribution yet, but you can see side by side the deposit of large holders, which is what Big Whale Explorer is giving you, and on the other hand, you can see the actual distribution coming from CryptoQuant that happens slightly delay to the future. And there's been these deposits on 21st of July, and now we get these other indicators saying, yeah, large holders were selling. ETFs are still in the positive. We have yesterday 700, today we have 552. On Ethereum, that's also the case. Let's see if Ethereum is putting a new all-time high in cumulative flows. I don't think so. It's starting to look like a head and shoulder. Hopefully we can break that very soon. For that, we need a new all-time high, basically. We are at 57. We are entering grid. So do the usual. You know what is that, right? Get some espresso, strong espressos, ideally 2 or 3. Go and find a mirror at home. Look at yourself and slap yourself if you're trying to look for longs while being in the grid. This is time to start looking for profits. That's why I close my long. Of course, it can ride a lot longer, but yesterday I decided to take profits and to focus on looking for shorts. If we get a pullback, if it looks healthy, new long. Liquidity on the upside doesn't look much attractive, at least in the short term. You can see we took already all this cloud in here. There is the 120 that is also visible in CoinGlass. Longer term liquidity, of course, if we go into 125, 126, right above the all-time high, we are going to find the biggest liquidations. And if we go there, we could repeat a scenario like this where we cross it and we go into number 3. Now, notice how number 4, which I haven't put the number yet, but there is a number 4 there with this heel that is now taking the lead against number 3 at 141 and then at 153. That's also the new kid in town. On the lower end, we didn't pinch 107. That's the hair in the soup at the moment for anyone holding along. And it's probably annoying everybody that is sitting on their hands and that couldn't manage to take any advantage of this move up. Now, on the 30 days, yesterday we had a peak in here, and that is currently gone. I think it was at 120, but now there's been new shorts in here, and they're balancing things out, and the biggest, the winner at the moment, is 109.7. There's been some liquidations. People were saying that there were a lot of liquidations of shorts, but in the past 24 hours, I can only see 235. And looking at the big picture in here, if we go into 22nd of August, there's a lot more of shorts liquidated. We could say from 56, this is around... There were 150, and in August there were 436, so almost 3 times the amount of shorts liquidated a while ago. So we are still kind of in the median in terms of liquidations. There's nothing substantial that can be used as a sign of, well, now we need to start liquidating the other end or anything. It could be any in practice. Purple whales are holding there, and the browns are continuing with the interest in trading long. There is a chunk of resistance at 117, and support is immediately underneath the price at 114.5. Open interest has decreased slightly, and the longs have exited partially. We'll see how much we have declined in the ratios of longs versus shorts shortly. We were at 52, I think, last time I read it. Now we are at 50, so it's not that dramatic decline of longs to really call it for a guaranteed local top. And we can see those immediate liquidations up until 111 in here. It will be really nice if we can take them to start a new long. But typically on Fridays, well, at least what I have seen in the past months, we get some sort of rally into the Friday close, leaving the price ready to create a CME gap for the weekend. Let's see the fair value gaps. Now we have paved the downside with a bunch of juicy fair value gaps below the price because there hasn't been any clearing of imbalances. Those are spanning from 114.8 to 110.3. That's even below my entry price, and I wish we could go there to repeat the long, but I also have to keep in mind that if this breaks too aggressively, it could be the beginning as well of the bear flag target, right? So it could start from there and start doing this. For the V recovery scenario, there are two juicy fair value gaps at the top thanks to this aggressive sell-off from 119 to 123. Nasdaq is looking into the positive for the market open, and so does the S&P. That is a little bit flat, but we are at all-time highs. Gold is just holding right there, really not selling off. So everything is pointing up. Like you get assets that are calling for safe haven, for caution, and you get the assets that are aggressive, and the more aggressive ones, all of them at the same time are doing all-time highs. It's just crazy. And the second day of altcoin season, things are partially in the green, and one of my members was asking for the Bitcoin dominance reading, and I think nothing has really changed that much since the last time I was looking at the Bitcoin dominance earlier this week. We have the breakdown, the retest, the continuation, and now we have a lower high at 36, and this week we are at 34. What I would like to see is continuation here, but I think we might be seeing that very soon because this is really not doing any effort to reclaim 50 and then to go into 70. Maybe based on seasonality, we could have a little bit of a push of that Bitcoin dominance, also because the altcoins have been doing great for a while, and also because this is a level of support. You can see it in the past, that's the 58. So if that respects, we could see a move into 60 potentially. Remember that this whole structure in here broke down. It's kind of a head and shoulders there that broke down. So we could come into 60 to see a final rejection. Another one, we already have one in here in the RSI, but maybe a more substantial one against RSI 48 with further continuation into bottom of the range. After all, Ethereum is doing healthy, is still defending the all-time breakout of this resistance on the weekly. So since this is the last video you're gonna have until if I do a Sunday Alpha on Sunday, I'm gonna do a wrap up and to re-enter with my position, given that we are here against strong resistance, there are order blocks, there are signals, there are different things that are saying that it will be challenging to really just go ahead and start smashing all the levels up ahead. I closed my long, I took decent profits, and now I'm looking either to see a test of support with some signals that show that there is healthiness there, or looking to take short. I'm interested into maybe potentially doing slightly higher high against 117 to start building a humble short that I can scale up if prices continue rising into 120 and 125. Not that those are the levels I'm gonna add up, but if you wanna stay fully informed with my moves, you can join my BTC articles tier in my Patreon. That's the cheapest one, and that guarantees you to get summaries of all these videos straight into your email, as well as emails with any changes I do with my positions on BTC. Thanks so much for watching, and I hope you enjoy the weekend. See you next time. Bye-bye.